Well, folks, here we are at the halfway point of 2022 and, well, how's it been for you? My guess is you've probably had better half years. So, I thought I'd at least mark the occasion of the year being halfway over by giving you an update on the state of the crypto market. And spoiler alert, it's not pretty. Now, despite some recent mini rallies, Bitcoin is back below 20k as I film this. And if we take a look at the Crypto Fear and Greed Index...
Right, darling! What's the plan?
Yeah, it's pretty much as normal. So, what gives? Well, a quick glance at the crypto headlines might suggest that this latest downturn is a result of yet another spot Bitcoin ETF application being rejected by the SEC. This was Grayscale's attempt to convert its Bitcoin trust into a spot ETF, and the SEC said no, and now Grayscale is suing the SEC and yada yada yada. The fact is, however much people might have been hoping that this time it might be different, Gary Gensler and his chums reject spot Bitcoin ETF applications for breakfast, and it's almost certain the markets had priced this latest rejection in. The SEC's reasoning this time was concerns over possible fraud and market manipulation, and well, stop me if you've heard this one before. Basically, if you're pinning your hopes on a spot ETF being approved anytime soon, well, go and talk to the folks waiting for the merge to happen, and you can all just grow old together.
You said!
Now then, there's also the news that miners are coming under intense pressure as crypto prices continue to decline, because not only are some struggling to pay the electricity bill, but the sector as a whole has taken out a combined $4 billion in loans by using their machines as collateral. They're now having to sell their crypto holdings to pay down the loans because the value of said collateral has also declined sharply. They basically need to sell their sats or face getting liquidated. So, more sell pressure hitting the market, and at the worst possible time too. Now, there are obviously the ongoing concerns around Celsius, 3 Arrows Capital, Voyager and many others besides weighing on the crypto markets, but it looks like this current dip is more a result of wider economic concerns. Two words spring to mind here: inflation and recession. Now, Fed Chairman Jerome Powell remarked yesterday that although he and the rest of Team Fed are desperate to tame inflation without tanking the economy, that may not be possible. The so-called soft landing, whereby interest rates are raised gradually to bring inflation down while not tipping the economy into recession, yeah, don't bank on it. Jerome acknowledged this yesterday, and although few people will be all that surprised to hear it, markets across the board seem to be reacting accordingly. Inflation is arguably the Fed's greatest fear, and it looks like Jerome and Powell are more concerned about getting inflation down than they are about a possible recession. Now, as it happens, the official definition of a recession is 2 consecutive quarters of negative GDP growth, and so far we most definitely had that in Q1. We have to wait until the end of August to get the Q2 figures, but I mean, come on, the chances of those figures being anything other than grim reading are pretty slim, if you ask me. Although we can't all don our official recession outfits just yet, we should probably be at least thinking about getting them back from the dry cleaners. One person who shares this view is ARK Invest head honcho Cathie Wood, who points out that factors like spiralling retailer inventories and plummeting consumer sentiment point to a recession in all but name. And it's hard to imagine that a recession is avoidable at this point, whether you agree with Cathie's points or not. So, the upshot of all this is that investors ain't feeling too confident and are likely moving into what they perceive as safer assets like, well, cash, basically. Households have rising food and fuel costs, among others, to contend with, and that means assets like stocks and crypto are seeing more sell-offs as people look to keep cash on hand. Price goes down. Now, one possible ray of hope may come if we can at least see that inflation has peaked and that the worldwide rise in interest rates has started to take effect. That would signal a possible easing of rate rises in the future, which could see capital flow back into asset markets. Well, we'll have to wait and see, but for the time being, expect more volatility.
What's your prediction for the fight then?
Prediction?
Yes, prediction.
Pain.